All right. Can everyone hear me now? Hello, hello, hello. Sweet. Well, I tried to set up a new USB microphone, and apparently GoToWebinar still doesn't like it. So it's the AirPods again. So thank you for hanging in there while I tried to figure that out. Welcome to August 27th, Trade Findings and Adjustments. I'm Keith Bybee with Hurley Investments. You guys know me. I think most of you. Good to be with you this evening. Um, so I hope some of you were able to listen to Kevin's recorded video he sent out yesterday night for our market commentary. I had realized that he had no video recorded, which was a bummer, but everything he said seemed to make sense without it. So hopefully at least listen to it, and it wasn't too much of a problem. You can also make sure to go on to myhurleyinvestment.com if you want to see some of the stuff he had written out as well. You can go ahead and check that out, and you will be good to go. So I had realized what I want to talk about today is I'd realized that I've never really done a kind of who I am, what got me started with investing, and what got me started working with Kevin and partnering up with him, and what I'm all about. I'd like to go over that a little bit. Hopefully, I won't bore you to death, but I think it was I have a small amount of experience, but the experience I've got is I think pretty useful and valuable to people. So I kind of wanted to just lay that out there and give a healthy dose of honesty, and you guys can take it or leave it, and it'll be recorded for everybody to see. Following that, I'll get to some trade ideas that I had, and get you guys a good recommendation. So I got started a few years ago. I really got into the stock market and just looking at things and looking at different programs out there around 2015. So I'm consider myself fairly wet behind the ears still. But I think I've got more market experience than maybe someone that's just written up a bunch of financial plans and stuck stuff into mutual funds and just said your average return will be such and such, and you're good to go. So to start off, I went to school for music. That was my background. That's what I always wanted to do. I still have a music studio, and I still enjoy it and kind of do it more on the side now, obviously, since I'm here talking with you. I worked for a music production company that eventually had some financial issues that warranted me to take off and go do something else. For a while, I worked for my father, doing a bunch of random stuff, but helping with some of the businesses he was involved with, and being more or less a executive assistant, for lack of a better way to explain it. And for a while he had been working with, and we'd been interacting with a wealth management firm that had his money under management, and I started, doing my own thing and kind of seeing what I could do to learn. And during the time, he had been sold a life insurance policy that basically was supposed to be this great silver bullet that solved all sorts of problems and gave you a kiss goodnight, and was essentially told that it would pay for itself and you could borrow from it tax free, and your kids would get this killer death benefit when you pass on, and all of this stuff. Well, fast forward a couple years later, and this is essentially a universal life policy, and this policy was struggling to get along. He was told, we're going to put an investing portion. It's more or less, I like to describe it more as a premium financed insurance policy. So you take out this big loan, and the loan has an interest rate on it, obviously, and that cash value is goes to giving you your death benefit, and supposed to grow, and it grows in the market. They had put them in essentially the world index, so the FTSEs and the SPX and the Asia stuff and all of that stuff. So it's supposed to be conservative growth. Well, yeah, that's great. But so moving along, what happened after that was, they had created this policy to work with the market, that world market being turning out a 12 to 13% return on average. Well, you guys are smart enough, and you're smart enough to know that planning completely around an average return doesn't necessarily get you where you want to be. Well, one of the great things about, well, quote unquote, bunny ears, about this policy was, you can borrow from it tax free, and that's fine. Okay. But you borrow from it tax free, and you then have an interest payment, for borrowing, right? And if that interest payment becomes more than what that 12%, what you're supposed to get, or I guess the other way I should say it is, if the market doesn't churn out that 12%, then things get a little dicey. It kind of goes upside down. And I guess I should be more fair. The policy was actually written for a expected 9% return. So that was their trade-off. That was what they were being conservative with. So it should do 12 to 13%, this world fund, but this policy should work at 9%. Well, if you guys know anything about going through that process and getting an insurance policy, and if you've ever had anything like this, that's pretty high. 9% is what you'd expect. That's what it has to do to work. Well, enough with the details. Long story short, it went belly up, and it cost a whole heck of a lot of money to get the heck out of, and it hurt for my dad, and it was, for me, it was personal and really kind of pissed me off. And um, seeing him go through that and having to, make adjustments, and um, it was rough. And that kind of got me. That's what really kind of got the fire started for me. Um, I wanted to help him find something that could make some money, and wasn't total bullcrap. And that's kind of hard sometimes. There's a whole lot of garbage that's out there, and a whole lot of garbage that's sold to people. And guess what, guys? An insurance policy is not an investment vehicle. So mercy, please don't treat it like one. This kind of got cued by a text I got the other day, asking me about some laser fund, something or other, a bunch of stuff, that it was this tax-free investment vehicle. And lo and behold, long story short, it's pretty much the same type of thing, a universal life policy that, their disclaimers that, we don't, please don't use this as an investment vehicle, but that's exactly how they talk about it. And it kind of, it just pisses me off. so um so that's kind of the thing that got me started. And when I had met Kevin, you know I I'm a super skeptical, and he pretty much had gone through and had to teach me everything he knows before I really felt comfortable, um, you know, working with him. But I had went and got licensed and had talked to, other firms, and it seemed to work the best with what Kevin's doing and the way, we invest in our philosophy. And, that's not to say that we're prophets and we can predict the future, and, but we've done great in the past, and we have a philosophy that works. I kind of talk about our investment philosophy. There's two separate things we've got going. We've got a trade finding class that you guys are here listening to me with, but we also have obviously our wealth management, where we call a trade, and you hear us talking about it all the time. And so there's a few separate things, and I hope you'll keep in mind as you're following with us on these trades that, this is for a trading account. This is for money that you're okay seeing down for a while, money that you're okay losing in the stock market. Be conservative. You don't need to risk so much of your money on a trading account. But I kind of wanted to just go through that. I just feel like there's so much stuff out there that is sold that, even if it's completely legal, is just silly. We've got I have conversations with friends and people about, our feelings and my personal feelings about how the investment and advising industry altogether has some serious problems, and doesn't do really most of what is claimed, and most of what is put out there. I think that the typical advisory firm that puts you in a 60/40 stocks and bonds. Sorry, just getting some comments here. Internet connection, not necessarily mic. That's probably true. Sorry, Abraham. Well, I think everyone's hearing me. Anyways, a 60/40 split, 60% bond stocks and 40% bonds, or vice versa, and a financial plan that is run through a computer program that says on average, you should be making such and such, and of course they charge you for the financial plan, and the numbers tend to never really work out the way that it's presented, because average returns can be anything depending on what number of years you choose to go on. Our market is supposed to average 7.75 or 8% a year, right? That sets somewhat of an expectation that every year, or even if not that, every few years, that's what you could expect to see. And that might be true at some times, and other times, depending on which years you're looking at, that might be completely false. If we're going after the last 20 years, I think I saw that was closer to 4 to 5% average return on our stock market. So average returns, guys, are linear. Our stock market, and any market for that matter, is not. So going back to this wealth management firm, they had set up this really slick looking book of papers that showed all these charts and graphs and said, here's your financial plan. Now let's put you into this premium financed insurance disaster. I'm sure that's not what they said, but that's kind of how it went. And all the financial plan really did for them was give them an excuse to be more risky than they should, even if he wanted it. Sometimes people want things that are too risky, and you should be a fiduciary and tell them that that's a terrible idea. Anyways, so we don't do that kind of stuff. We don't. I love having these trade findings class, the real talk, the conversations with you guys, and showing in our trading side here a real account with real money and a real advisor going over things with you. And this is kind of the fun stuff where we're trying to shoot for the swing for the fences, as Kevin likes to say. And it's great. It gives us an opportunity to really go over the markets, and hopefully to you guys it's entertaining and gives you some value there. Anyways, that's kind of what I'm about, and I'm attracted to the kind of investing where we don't pretend like we can outguess the stock market all the time, at least, and we can protect good companies' stocks that we own for our clientele through the riskiest times. And maybe we don't make every cent or dollar on the way down, but a lot of times we'll catch a good chunk of it, and that turns into more shares, and that's how you grow a portfolio. Anyways, guys, I'll get off my soapbox, if you will, and let's get into a trade. So I was looking at Costco, and I hadn't gotten a chance to really go through, some of the options quite yet. But I liked. I don't know if you guys noticed Costco. Maybe I should use the ticker symbol. So Costco had this pretty cool jump today. Right here. So they had topped out up here at 280-ish and come back down from, drug around with the rest of the market. Hit the 50-day moving average and kind of followed that up and took off on an earnings report that they did pretty well on, it looks like. At least the market thinks so. So that's what we're looking at. And man, it shot up all the way from pretty much 280 all the way to 293. So yeah, maybe that would have been cool to catch beforehand, but it's one. Costco's kind of a cool company. I don't know if you guys are Costco members, but I don't think I save very much, to be completely honest, as a Costco member. But I like to go in there and see what they've got and throw all sorts of stuff I don't need on my card and feel like I got a good deal on it. And a few years ago, I think it was 17, we had gotten a client who said, "Why don't we do something with Costco?" And at the time, it was kind of like the same time of year. I think it was after an earnings where they had a breakout earnings, and then had and you can consider this my on the other hand, our risk in a trade with Costco. So at that time, they had been moved around by news with Amazon. So Amazon had come out at that time, end of summer 2017, and said, "Hey, we're probably going to buy Whole Foods." And apparently that meant that Costco needed to drop $14 and all of this nonsense. And so long story short, we saw that drop and like, hey, there's nothing really else going on right now. We weren't looking at it because, retail, we didn't really care. Retail was doing so terrible. But Costco, is a different beast. And, it really didn't make sense to see it drop like that on some silly news about Amazon buying Whole Foods. And then it went up a little bit and dropped again. And when Amazon did buy Whole Foods, and we bought more contracts of long calls, and that was a cool, swing for the fences, trade that worked out really well as it shot back up pretty quick after an earnings and towards the end of the year. So that was kind of cool. So that was then, and this is now. So what I was seeing is, had a good earnings, and technically I like to see this big, huge volume and see it up so much on a day that's really flat to negative. And, the situation we're in with a week where not a lot of stuff really makes sense to be trading. We've got most of the big money is out for vacation on a Labor Day weekend coming up, and really not looking to worry too much about it until Tuesday when things come back into play. So This one, on the other hand, it kind of seemed like it made sense. So let's take a look real quick at Costco. So first, I want to check out what would a naked put look like. And my frame of mind is, we could do a bull call type thing or a call. I'm kind of more looking at with a week like this and a 3-day weekend where we could see we have volatility that's up, that's elevated a bit, and a 3-day weekend where we could see by Tuesday some volatility crush, volatility coming back down. So a short option, bullish options seem to come to mind a little quicker. So looking at September. So 275 is kind of where I'm looking at. Bid 215 to. So keep in mind, in an evening like this, things may be completely different tomorrow. And you just kind of need to take a look at it and see what's going on. But just realize I'm talking as things are right now. So 275, going back to the chart, we have a 280 support level. We have I could say 275-ish and really a 273 on our 50-day moving average that are kind of bigger levels of support there at the 50-day moving average as well, 273.60. So at a strike with closer to 275, that makes me more comfortable than maybe a 280, where, if things go the other way, it's not going to be as big of a problem. So, excuse me. So, cash covered short put. What that means is obviously you're going to want to have some cash to cover that in the event that it does fall back down past 275 rather quick and you have some stock put to you at a much lower price than is trading today. $15 buffer is kind of nice to see. So that is an option. Now, not everybody has the cash to have to worry about that, and not everybody wants to worry about that kind of risk, which I totally understand. So let's look at some bull puts after that. So option one. Cash covered short put with a September 275 strike. Make sure, obviously, you have the cash to cover it, the purchase of stock at the strike price 275. Obviously, we get the premium credit in of somewhere north of $2, right? We'll go with the bid and ask midpoint of 226. All right. Any questions, guys, so far? So I'll give you option number 2. So let's check out. I just want to see real quick. $5 spread. Excuse me, 250. Where do you go down to? This guy. $10 spread at, excuse me, $5 spread for 90 cents. Let's see. 280 obviously is closer than I said. But maybe this is another option if you see it tomorrow continue to head up pretty good. Maybe it might work to really take a look at this. Let's see what $10. That gives you $1.60. That would work a little better. So $10 spread, bull put gives you $1.60 more credit. That gives you the ability to make more money if it starts to head up pretty quick, continue to head up pretty quick, and get out at 50 cents of profit. But let me see. I'll look at $265. I don't have that. So this actually gives you, and we're not actually getting any bid and ask spread on our 265, which kind of puts a damper on this idea, but I think we would get pretty close. You can kind of see what this is, 270, this 165, this one's going to be more close to 130, which means the 165 is going to be closer to 115 or something. That gives you still $1, over $1, I would think. You have to check this obviously tomorrow to kind of see where you're at. Let's just see what the 270s. 70 cents is not a ton of credit where we could really see it bleed off, not completely, but a good healthy amount of bleed off over the rest of the week and a 3-day weekend. Oh, there we go. Or did I do that backwards? Let's see. That's a bear put. We want a bull put. And it's frustrating that they don't have 265. They have 260 quoted, but not 265. So, knowing that it's going to be fairly close around that $1, though, this is the one I like the most. And let's see where it opens tomorrow, see what happens. But I just feel more comfortable with a 275. What's that? $15 buffer. And that's just me. Obviously, you can go a little further, and it does seem like a $10 spread is going to be the best as far as giving you enough credit that can bleed off, where your short option bleeds off enough credit to maybe give you 30 to 50 cents. So I'm going to plug that in. While I'm doing that, type in your questions and let me know your thoughts. So we have a $275, $265 hold. $275 short. And a 265 long as our hedging option. And this one was the same as above, 226-ish. And long put, I'm gonna guess, was around $1. So that's what that is. Make sure I have it in a readable way. For about $1.26. And that would be to lose value on our short options. I should say credit, because it's value to us. $30 to 50 cents. On high volatility, higher volatility week, and a 3-day weekend to bleed off some of that credit. I'm getting a question. Abraham, in option one, would you consider only ownership? Ownership of what, Abraham? Like stock? I see what you're saying. So if I were to choose option one, would I only choose it if I considered owning the stock? And the answer is yes. So that is the risk. It is likely that you won't have to purchase it. And if you do choose that option, then certainly follow up with me or Kevin so that we can help you adjust it or do what we need to help you through it. With something that I'm not necessarily putting on for this little trading account, but is a good recommendation for something like this week that you can choose to do. We need the feedback if you really want to have some help adjusting if the case comes to that. So, okay, perfect, Abraham. Any other questions? Any other questions about, my philosophy and my background or anything else that we talked about? Okay, got a question. Is the expiry 20 September 19? 20th September. Question. So, usually it says right on. It doesn't say usually until like the ticker, but 24 days, what is that? Let me look at my calendar. That is the 20th. So yes, September 20th. But I'd like to see some bleed off and some profit in there over the weekend and get out on Tuesday is what I'd really like to see. And if it comes down a bit, then we have that buffer there at 275 down from 292. That would give us a little time that we could wait in it and be okay. Any other questions? Just while you're thinking, I just want to look at what we got. The futures, by the way, are looking positive. So Costco futures are looking great. Up to 294 after hours, I should say, after hours trading. And indexes are up on the futures. Of course, that doesn't necessarily matter if we get a certain someone tweeting something and all goes the other way. But S&P and I think the NASDAQ were both caught in the middle of 250-day right here. Look at the NASDAQ. Yeah, similar deal. And I think the Dow was taking a look at its 200-day. Yeah, So Dow has been playing around with this support level. The other two are kind of right in no man's land, right in the middle, but at a otherwise a support level, I would say. All right, got some more questions. Any feel for which way the market's headed? Well, I think this week, I mean, obviously that's entirely subjective, but Lee, but this week I would suspect it flatter down. Again, going back to, we don't have the institutions in there to really do much of anything, and we're also at the end of the month on Friday. Everyone wants to get out of the market at the end of the month to a 3-day weekend and come back on the next week. So that's what I think. If you mean longer term, I mean, it's entirely dependent on our trade issues. Could Trump just totally pull something out of his hat and come up with a trade that he's willing to sign and China's willing to sign, and yeah, that's possible. What it's looking at like right now is that probably isn't going to happen sooner than later, but that's the market we have to deal with, is these news headlines. And I do like to see with the 10 and 2-year bond yield inversion that we keep getting, it does seem like the market is more willing to just let that do its thing and not bet the whole house on the idea that everything is going to go to hell in a handbasket, in the next month or two. I think that Kevin went over this quite a bit last week, and what I liked that he went over was, this 10 and 2-year bond yield, when it inverts in history, it could take up to 5 years to really be the front indicator for a leading indicator for a recession. So it's not like this is a good metric to use to predict the future. Obviously, it's disconcerting. It's one more thing that we look at and pay attention to. But last year we had algorithms triggering sell-offs on a inverted yield curve trigger, and kind of ridiculous. So I think some of that has shown the market, hey, just relax about it, maybe keep it in mind, and it's not the most important thing right now. It's something to keep in mind, and it doesn't have to become a self-fulfilling prophecy that it kind of did. Another question. Is the profit 226 credit and max loss $10 less than the 226 credit equals 774? Yes, that's correct. So again, that's why, Ida, you got your numbers right. Max loss is the spread minus of our net credit Actually, sorry, no, you didn't get your math right because we don't have the hedging options cost. So you would subtract first your total net credit, which I was assuming is around $1. So our net credit is around $1.26, and then subtract that from the $10 spread. Going back to Costco. But yeah, that's why I like a 275 good chunk of change of buffer. And you know, if it keeps going up tomorrow, you'll get a little less, but our um, our volatility is still, elevated. So over a weekend, 3-day weekend, and a otherwise just sideways and somewhat volatile week, you can profit from some credit, and that's all we're looking to do. Any other questions or follow-up questions? So just with follow-up with the previous question, any feel for which way the market is headed? Let's just go back real quick. The market is headed right now technically sideways. We're stuck in a big range. This is kind of where I'm looking at. We've got good bounces down here at 28.25, maybe closer to 28.50 on S&P, and a ceiling of around 29.40, 29.25 ish. So that's what I would expect to be between through the rest of the week at least. That is the signal that this month has kind of given us. So all right, guys. Any other thoughts or concerns? Maybe you think these are just stupid. That's cool. You don't have to do them. All right. Thanks, Abraham. All right, guys. If that's it, no other questions. That's it for me. And thanks for listening to me ramble on and giving me the chance to be a little vulnerable that I typically am not, and letting me give you a piece of my mind. And be careful. And I'd love to see some emails sent my way or what have you with some thoughts or concerns on investment strategies or investments you guys have heard of. And it doesn't have to do with anything we talk about. Any kind of investment you guys feel you want someone to take a second look at for you, and help you do a little due diligence. I love that kind of stuff. I like adding value and being helpful in that regard. I certainly don't want you to see you lose money when you can avoid it. So send me an email, thoughts, and whatever you want. And thanks again for being with me. That's it for me. Thanks, guys. Good night.